Hi everyone and welcome to today's morning report on Wednesday the 17th of February with me, Richard Perry, market analyst at Handset Markets. The European trading session has got off to a fairly solid start actually, and that's sort of come on the back of pretty decent gains last night on Wall Street. We had the S&P 500 up 1.65%. They were playing catch up after the President's Day holiday, but still that was a fairly reasonable return considering the oil price fell away quite sharply on an intraday basis. After that agreement between these OPEC countries, which were Saudi Arabia, Qatar and Venezuela, and also the non-OPEC country with Russia. That agreement was on the proviso that other countries also froze their production levels from January, and it looks unlikely that's actually going to be seen at the moment, isn't it? Because I mean, you've got Iran, who's only just come back to the market and wants to ramp up production. So the chances of that happening, I think, are very slim. Now, what's that actually done to the oil price? Well, as I said, prior to that meeting result, that was the oil price hit a high of 31.53 on WTI, fell away sharply on an intraday basis, all the way back down again, closing towards the low of the day. And today it's fairly stable. But I think that what we are seeing today is a bit of a strange. Well, you're seeing equities fairly positive. FTSE is actually pushing towards 1% higher now, FTSE and DAX. But I'm not 100% convinced by this move. I really am not. I think that you look at the forex markets today. There is still an air of safe haven trading. You've got the euro, which is stronger. You've got the yen, which is stronger. You've got an interesting turnaround as the European trading session has got underway, because that sort of those safe haven moves have unwound a bit, but still I think you've got the fact is that gold is trading higher on the day as well. So I think it'll be interesting to see how this one moves, because this little intraday move on oil it's not really all that significant yet, and I think you probably are still looking at oil to drive the sentiment, but I'm just a little bit cautious because also you've got these treasury yields which are sort of fairly stable really. They're sort of slightly lower on both the 10-year and the 2-year treasury yields, so it's not really showing through as a risk on sentiment by any means. So I'd rather be I think it's sort of more of a cautious play than anything else at the moment. You've got a lot going on today, actually, economic data wise. Main focus will be the Fed meeting minutes. That's at 7 o'clock this evening UK time. Now, we've had comments from Yellen, we've had comments from Stanley Fischer in recent days that would suggest that the Fed is sort of a bit more dovish than it was certainly in December. I mean, with good reason, really. And it'll be interesting to see what the Fed minutes come out with to sort of put a little bit more meat on the bones. You didn't have a Fed meeting press conference on the last meeting, so we're looking out for a bit further details as to their discussions anyway. Now, prior to that, we've got a whole raft of data actually, starting off with the UK. Crikey, where is it? Here we go. Starting off with UK, you've got 9:30 today. You've got unemployment data. Forecast to come in at 5.0%, so a continued decline in unemployment. The main focus will come, though, on the average weekly earnings growth, which on an ex-bonus basis is expected to fall to 1.8%, so continued decline in real earnings in the UK as inflation just starts to drift a little bit higher. You're getting average weekly earnings falling away, so that suggests real earnings is contracting. And that, again, is not going to be positive for sterling. And we saw a breakdown in sterling, and that, again, is likely to be negative for sterling. Then into the US data, we've got the building permits at 130. Expected to come in at 1.2 million, so around about the levels that we saw last month. And also the housing starts, which are 1.17 million. So again, just slightly higher than last month, and these are all elevated levels still. The industrial production is at 215, expected to come in at plus 0.4% month on month. So that would actually pick up. That's actually sort of best reading for 6 months actually on a month on month basis. But also that would be picking up the year-on-year data which has been in consistent decline. Now that's the first month it's picked up in 6. Does that mean a turnaround? Well, I think it'll still take a long way to turn around, considering that the regional Fed data is still so weak in the States. But that's at 215, and then also at that same time you've got the capacity utilization, which is again expected to increase slightly to 76.7, which again would be a very an improvement, which is again the first improvement in 6. So does 1 month improvement register a trend? Well, maybe. I think we need more confirmation of that, so let's not get too far ahead of ourselves. That takes me to my chart today, which is the dollar CAD. Now, yesterday we had dollar strength coming through, and also oil price weakness, and that has sort of come to pass with the dollar CAD forming a bit of a low. Now, that low coming at 37.05 is a higher low than the 36.35 level. Also coming in just above that big uptrend, doesn't it? Now this is sort of all coming around about where the momentum indicators are starting to turn around. We've seen the MACD line certainly starting to come together. Stochastics are already rising. RSI sort of again also sort of beginning to settle down and start to sort of think about a rally. Now I think this is a bit early to start talking about a recovery, a sustained recovery. But it's certainly a chart that I'm going to be watching, because we had this intraday turnaround. You had an outside day. You also were on the brink of a bull hammer candle, but into the close it slightly just drifted lower. So it didn't quite have that bullish hammer candle look to it. But certainly it seems as a bit of a turnaround in the sentiment. Basically flat on the day to day. So this, I think, will be an interesting one to watch. If the oil price starts to fall away and the dollar strengthening, I think that will be certainly reflective in dollar CAD pulling higher. Now you've got the big resistance on this chart, 1.4 figure, 4 big figure is the big resistance, December high, and also the reaction high in February. So if you start to push above that, I think that is a real sign of a turnaround in this dollar CAD. Now if the hourly chart comes up, which it does, you can see here you've got a minor sort of band of support around 38.50. Bit of a pivot line, isn't it? 38.50, and another sort of near-term pivot at 38 figure. So these are the two levels at which I'd be looking to use as sort of the next basis of support, because I think that this is where we're going to see the market push higher from. Now, if you saw a breakout above that reaction high from yesterday, 39.10, that would obviously pull you back towards the 140 big figure, and that is, as I said, the big test for this dollar CAD. Perhaps it is a bit early to start getting bullish again about dollar CAD, and I think there is obviously more confirmation that needs to be seen. However, I think this is an early one to start thinking about and keep on your radar. So one to watch anyway. So I wish you good luck in your trading on dollar CAD today, and I will speak to you later. Thank you.